You're watching the count. Well, let's get straight back into the markets. Let's go to our next guest. Mehraboon Irani from Centrum Broking joins us now. Mehraboon, good afternoon to you. You've been extremely circumspect about the market so far. Let me start by asking you, what did you make of the up move that we saw? 16.5% up since the 1st of July.
I think very far from it. I think I was one person who was termed as the only optimist possibly in this country. I was just stating the same thing, that yes, the factors are negative, and I in fact have called quite a few people the prophets of doom. It's the other way around. I've just stated that we will be in a trading range. Okay. The fact is we should be moving in a very broad range of 12 to 18,000 over the next 12 to 18 months. Let's understand one thing, that how the problem started, where the problem started with oil, started with commodity prices, and both of them are showing signs of cooling down. Were we ready for it? The fact is, if you are not ready for it, if you are not very sure as to how things would move, you should have used sharply lower levels to possibly buy into this market, and all those who entered first are possibly having the last laugh, and people are right now discussing. I think even today we have a lot of skeptics who, instead of accepting the fact that the markets are gone up by 20% like what you are saying, Mini, there are still a lot of people who still say there's a bear market rally. The fact is, yes, at the present level, well, after the fact that the market has gone up nearly by 20%, it's not an easy call to say that just go ahead and buy, give a blanket permission that go and buy. But the fact is, at every lower level, I personally feel one should be looking out at opportunities in this market. And I also stated, Mini, which you may recall, that I feel at every level in this market, there are opportunities available.
Well, that is a given, because that's why there is a market, Mehraboon. There are buys in any market. But I'll rephrase my question on being circumspect. Going forward, you said 18,000 could be the upper limit of the range. Do you think the up move that we've seen, we have enough steam to actually take us through those two levels, or do you think there will be a correction before we do that?
There could be corrections. I think, Vinny, allow me to state that it's the opportunities which we are going to have right now. And I'm saying we means I'm referring to people, frankly, who understand the markets quite much better than most on the street. The opportunities are going to be much more than what we have seen over the last 3 to 4 years. And when I'm stating that, I mean it. Because if you say rightly, in the last 1.5 months, the markets have gone up by 20% or 18%. The indices, quite a few stocks have moved up as much as 30%. And I'm talking of frontline stocks. So I think this type of opportunity continue to happen, because I personally, as of now, and yes, I'm going to, I'm reiterating what I was stating. I personally don't think it's going to be a one-way movement for the market. The fact is, the concerns are for real. But the fact is that the concerns are being overplayed a lot. So at lower levels, my advice to investors would be buy. And I think personally, people with deep pockets, people who really understand as to what they are buying, are going to have great opportunities according to me over the next 12 months. Because earlier we were having a one-way movement, but not many of us had participated the way markets would have wanted us to participate, because we were circumspect at every rise. Let's not forget about it. We were buying at 15, selling at 16 now, waiting for the next breakout. People are talking of breakouts and one-way movement which we had. I think at the end of it all, the fact is people were having a lot of paper in their hands at the level of 21,000. And then people complain that the markets are a place where we can only speculate and all those type of things. The fact is, why don't we blame ourselves? At the higher levels, we were all greedy. Let's accept it. At lower levels, we are all very circumspect, very cautious, and fear has taken over. So even when we have a 20% move, we all have a skeptic still stating that it's a bear market rally. The fact is, let's be honest, when things are attractive and the macro factors which are a little negative are known to us, is the time to go ahead and buy. Maybe not at the present level, Mini, but if the market corrects again, I think some more money is going to come into the market.
Right. Mehraboon, let's get a little specific. Hindalco, the change in the rights issue ratio, there was a lot of fear when the rights issue initially was announced at 1:3. The markets haven't reacted too much, but we just had Ashu take us through the nuances of this. What's your own assessment?
I am basically negative on commodities as a packet, as well as on metals, with the possible exception of steel. So I think what Hindalco management has done, I think on the one side we should give them marks that they are being fair to their shareholders, but ultimately they also have to raise their money. On the other hand, let's be honest about the fact that this is a reality, that the way the valuations have become, it's the management have woken up and stated that fine. The rate at which I was giving it to you, now I want to be a little bit more fair to you. The fact is possibly, if I understand well, it should lead to a little bit more dilution of equity, and I am negative on this sector. The fact is, I don't think I'm going to be attracted enough to possibly recommend Hindalco even at the present levels, even if I was going to get rights at possibly 40-45% lower in the market price.
Right. We'll come back to you, Mehraboon. We still have Mehraboon Irani from Centrum. Mehraboon, before we actually talk a little bit of stock-specific issues, your own assessment of what the government is saying on the growth front, because while the finance minister has said that there is no slowdown, we have had the Economic Council chairman saying that there could be the GDP growth is going to come down to about 7.7%, which is sub that 8% that the government was holding out. What's your own assessment right now?
I think basically the broad consensus is that it should be between around 7 to 7.8%, and that also is credible considering the fact that there are negatives across the globe right now. And allow me to state that in spite of the numbers being scaled down, I think quite a few of it was already expected. I think not many amongst us in the market were expecting the GDP growth to be anything above 8%. So this is something which has been well digested by the market already. And number two is we can only take recourse from the fact that we still remain possibly the second fastest growing economy in the world. So I think what is important from the market angle is valuations, the corporate growth, and even if we take a 12% earnings growth for corporates for 2009-10, considering with the lag effect what the RBI has done, tightening of monetary measures, even a 12% growth, I think we are going at around 12 times FY09-10 earnings, which I think makes the market look quite attractive to me, possibly. So any dip from here, I personally feel, along with me, there could be many others who will possibly be now thinking a little bit positive and using sharp dips as a buying opportunity.
Right. Mehraboon, we've also had the SBI chairman saying that he believes that the rates, interest rates have peaked out at this point. That's a flash coming on my Reuters screen. What's your assessment on the interest rate front, considering that commodity prices are cooling off?
I think I would like to say amen to what the SBI chairman said, because I think if interest rates have peaked out, and if we don't have the figures the people are talking about of inflation possibly going up at 13.5, 14% over the next 2 to 3 months, if inflation also peaks out and interest rates don't go up any further from here, and if oil doesn't go back to 135 levels, with all these three assumptions, I personally feel the markets can definitely go up further from here, and even a correction, if any, would be a very small one. So I think there are a lot of ifs over here. The fact is, it's going to be maybe for the next 2 to 3 months, it could be a tough time. And also let us not forget the fact that the lag effect always plays. So the lag effect as far as the RBI monetary tightening measures, we could possibly have corporate earnings possibly slow down a little bit for September and maybe for December also. But allow me to state that a lot of it is now expected by the market, and the research reports which you see coming from research houses, all these people have taken into account all these things. So at maybe around 12.5, 13.5, 14, if the market again comes down to that level, I think definitely more and more money is going to come into this market.
Right, fingers crossed on the rate hike front at least, Mehraboon. But in terms of valuations, how the Indian market is looking, we are trading at about 15.7 times forward earnings. Only Japan is trading higher than that in the entire region. Is that going to be a deterrent for FII money whenever it does actually start coming in?
I personally feel that India definitely has outperformed virtually all Asian markets over the last 1 month. So if you are discussing the same thing just about a month ago, I think we would have possibly stated that around 12.5 times or 13 times valuations, I think India looks attractive, but yet nobody was ready to possibly buy into India at that point of time. So this is what sentiment does basically, and with oil cooling down, I personally feel that India as an investment story, I think still remains more attractive than most other Asian markets. So I think sooner or later, and I think many of you can possibly record me on this, sooner or later I personally feel even the FIs are going to come back to this country, maybe. Depends, maybe if we take the next sharp dip possibly, or maybe even now. But the fact is, yes, I personally feel some more money is going to come into this country very soon.
Right.